What's up, family? Welcome to another Food and Finance Friday at Lyle's Legacy. So, today I'm going to talk about life insurance. Okay? We're going to talk about different types of life insurance. Before I get into that, go take a little bit. Check this out. Yeah, go. So, this is a pasta and veggies with peanut sauce. Something my wife whipped up. Now, I have to say, she had made this peanut sauce that, was really good. It got spilled. So I had to try to recreate it. And hopefully I did it justice. Okay. So what is in here, you have, of course, like I said, pasta and veggies. So you have whole wheat spaghetti noodles. Then you have peas, lentils, butternut squash. Then has that peanut sauce on it. So let's get in it. Alrighty. Get for food. Ooh. Oh man. Has a little, just a minor kick. Of course, I'm a peanut fan. Mm-hmm. Got the lentils as that protein. Can't taste protein, but I'm just saying. Oh, that's good. That's good. Now I'll have to admit, what my wife did was better. It was, but this is pretty darn good. Mm-hmm. Mm-hmm. If you like Thai food, Thai cooking, it utilizes the peanut sauce. Um, and so it kind of puts you in the realm of eating Thai food, but that is good. That is good. Now, the ingredients for the peanut sauce, I'll put that in the description. Um, yeah, I wouldn't say the recipe, but we don't really measure that much. That just, but I'll put the ingredients in there. All right, so types of life insurance. I said we're going to talk about life insurance. So there are different types of life insurance. So what kinds of life insurance are there? All right. There are two main types. Okay. Two main types we have. We have term and permanent. Okay. Term and permanent. So now, these are pretty much self-explanatory. Permanent, that's what it is. It's permanent. Like you put some cement down, that's permanent. Got permanent marker. I mean, it's gonna be there. All right. So permanent life insurance is gonna be there. It's for your life. Term life insurance. That's what it says. It's for a term. You have a car note or a lease. You have a lease, okay? And it's for a certain term. It could be 2-year term, 3, 4, 5. All right. So, but it's gonna end at some point. Okay. So that's term insurance. Now, so those are two main types. Term and permanent. Now within the permanent, there are subtypes. I'll talk about a couple of those. So I'm gonna go over 3 total types of life insurance today. There are more subtypes in the permanent, like I said. But let's talk a little bit about the term, okay? So a term can be, 5, 10, 25-year term. even up to 40-year terms. There are some companies that do have a 40-year term. All right? So it's almost like a permanent, depending on when you get it. But term insurance, which that's the main purpose of term insurance, so that you can get, a higher amount of death benefit, and it's usually for a certain time. If you have children, it's kind of pretty much perfect for that. Excuse me. It's pretty much perfect for that. So you wanna, if you already had children, you're done having children. Like, listen, the baby making shop is closed. All right, then and you don't have life insurance, and you're getting some term insurance. All right, you're young, and so you go want to get at least the term for the until the youngest child is expected to be gone and on their own. Okay, so and at least through what do you say, college years. Okay, and so let's say you are 30 years old and your youngest child is 1. So you're gonna want to have like somewhere around like a 20-25 year term. Okay, and if you have a mortgage, then you definitely want to have it till at least that mortgage is paid off. Because if you, God forbid, if you should happen to die within your working years and before that mortgage is paid off, boom, it can pay it off, and you can your children, let's say they're in their developing years, they're in the years where they still need to be raised. They're dependent on you, the parent. Then there's money to provide for them. Okay, it's so in a sense, it's like you never left financially. Can't replace the value of who you are as a parent, as a father, as a mother, as a spouse. You can't replace that. But I had a very wise man tell me, when you die, you don't want your family to cry twice. Crying because they miss you, one, and then crying because of this financial burden that was left. Okay, so those are, you don't want them to cry twice. Cry once. My pastor says, kind of have like a bipolar funeral. It's like, crying because they miss you, but it's like, oh man, they blessed us with this inheritance. Once again, Proverbs 13:22, a good man, a good person leaves an inheritance for his children's children. Okay? All right, so you got that. So your basic term, it just has that death benefit. Okay? And it's kind of like renting. All right? Like, I'm not going to have this forever. I don't own it. So, at some point it's going away. Right? I can't, especially, okay, I'm sorry, let me say this. For those who have life insurance through your job, that's good. It's better than not having anything. But you own that as much as you own your job. So if you leave your job for any reason, you quit, you go to another better job, or you're fired, laid off, whatever, then that life insurance is gone. All right. So you want to have life insurance outside of your job. Okay. So that's the term insurance. Okay, the basic. But what about other needs I may have? Before you talked about protection against threats. Okay, so they have what is called riders. Okay, so living benefits. All right, that you can get added on as a rider. Some riders with certain companies are built in to the product. Okay, to the life insurance. Other companies, everything you get is kind of like a restaurant. It's a la carte. You know, you want to get this added onto it. It's an additional payment. Now, I will say that payment is minute. Okay, it's usually like very, very, very minimal, but there is a cost. Okay, so like I said, you want to protect against threats. Okay, what kind of threats are there that you need to protect against? Like for one, you get life insurance. You're protecting against the threat of you dying. This is term life insurance. Protecting against the threat of you dying, what we call prematurely. Everyone, for the most part, that I know of, wants to die peacefully, old in their old, later years. Just let me go to sleep and drift away. That's a dream for most people. They, family gather around the bed, but that's not the case for a lot of people. Okay, um, unfortunately, sometimes people do die young. Like I said, I had a sister who died at the age of 40. I was 40, now 41. So sadly, I've already outlived my sister. Okay, praise God, she did have life insurance. Okay, so her son, who she left behind, great young man, he was provided for financially, and we had this family that my brother stepped in. Praise God for him and his wife. Their family. Um, yeah. So, but so there's the threat of dying in your younger years. Okay. Then there's the threat of you either getting sick or injured. Okay. Getting sick or injured. All right. Getting sick or injured. And so it can be getting sick or injured, and that's keeping you from working. All right. So there's money to replace your income. Okay. But then also the sickness, being sick or injured, in the sense that, man, I need additional help. I need somebody that can help me, right? To help take care of me. If you're injured, or you have what's called a long-term care, or a chronic illness situation, I mean, you cannot perform 2 out of 6 activities of daily living, including bathing, eating, walking, dressing, a couple others. Can't perform 2 out of 6 of those. It qualifies as a long-term care or a chronic illness event. And so there's money when your life insurance has living benefits and it has these riders on there. There's money that's available to help take care of those things. Okay, and terminal illness. Doctor says, "Hey, listen, you have less than a year to live. That's terminal illness. Have a terminal illness rider on there. Boom, there's money to take care of that." Okay, so there's basic term insurance, which is just a death benefit. Is that if you should die within the term of this life insurance with however many years, 5, 10, 15, 20, 35, 40. I skipped some, you know, you get the point. Um, then it'll pay out. But what if I don't die within in that time and I never used it? Okay. Now they say there's a more chance that you are going to have a long-term care situation, hopefully not terminally ill situation, but you can be diagnosed with the terminal illness and not die. Sometimes there are people who have been cured, recovered from that. You get that acceleration of your death benefit. Even if you survive, you do not have to pay that back. I do want to say that. Okay. But there's a higher chance of that happening than you dying young. But clearly, people do die young. Okay? And as my father used to say, it's better to have and not need it than to need it and not have it. All right? Okay, so now that's the term insurance. And there's more things that we could talk about that, but those are the main things I wanted to point out. Okay, then we have permanent insurance. Permanent insurance is for your entire life. Okay, I wrote life first, so I messed that up. Meant to write entire life, so I wrote life in entirety. Okay, that's what that's for. So I said there's subtypes, right? So what are your subtypes? So you have your traditional whole life. Okay. That was the first. Before the others, the subtypes came along. That it was whole life or term. That way back in the day, that's all you had. Since then, there are more that have been developed or invented. Okay, and it's some pretty cool things that are involved in it. So, with whole life, what do you have? It's for your whole life. It's guaranteed to pay out. It's going to pay out at some point. Okay, whether you're young or you old, it covers the gambit. Okay, but then it also has what's called a cash value. Okay, there's cash that builds inside of it. All right. Now with that, there is another guarantee. There's another guarantee, and the guarantee is that you're going to get growth in your account at a certain percentage. Okay, at a certain percentage, whether that's 2, 3, 4, 5%, whatever that guarantee is, you know you're going to get that growth. Okay. Sometimes if the insurance company does really well, you can get more into that, and usually a payout in dividends. Okay, it gets extra money that comes back to you. Like, hey, but that's not guaranteed. But what is guaranteed is that you are going to get that growth, that percentage in your in your account. Okay. Now, with this, the growth tends to be it's steady. It tends to be a lot slower than some of the other options that we have. Okay. There are some pretty cool things that you can do with it. Some different strategies. We're not going to get into that today. All right. I'm going to talk about one other subtype of permanent insurance. Okay. It's an IUL. IUL stands for Indexed Universal Life. All right. Get all those words out there. That's your Indexed Universal Life. Okay. So what is Indexed Universal Life? All right. First of all, it is life insurance. There's that. It is permanent. Whether you die young, you die old, it's there. Okay. Now, universal life insurance has two buckets. Okay? Has two buckets. See those buckets? All right. Now, just like the whole life has the life insurance, and it also has cash value. Okay. Now, the life insurance part of it, not a whole lot more explanation that needs to go into that. Once again, what is insurance? Transference of risk. Okay. If you take the risk on yourself, either you have to use your own cash that's in your bank or whatever, or unfortunately, what a lot of people are doing is GoFundMe. You know, they're depending on the kindness of other individuals to family, not the person that died, the families are dependent on the kindness of other individuals to help bury their loved one. All right. Doesn't have to be that way. And life insurance, the actual cost of life insurance is not that much, especially when you're young. The younger you are, the healthier you are, the less expensive it's going to be. All right. Now, the cash value part. That is tied to or mirrors, mirrors the stock market. It mirrors the stock market, is tied to an index. Hence, the index universal life is indexed. It's tied to an index. And it mirrors the stock market. Okay, so now why is that important? Okay, it's important because with it mirroring the stock market, all right, it means there's upside potential. Upside potential, right? So wait a minute. You mean to tell me that my money can really grow inside of here? Yes. There's that upside potential. All right? So it's mirrored. It's not. It is not in the stock market. Okay? It's not participating in it, but it's mirroring the stock market. So there's an upside potential. When the market goes up, the cash value in this policy goes up. All right, but what about when the stock market goes down? Because we know the stock market goes up and down. Listen. Am I gonna lose my money in this thing? All right. Here's when I'm in an appointment with somebody. Here's what I often ask them. I'm like, okay, what's underneath your feet? A lot of times they'll look down like a floor. I'm like, what does that floor help you do? If they're in a house, they have a basement, look, keep me from falling to my basement. If they're in an apartment, and they're on the second or third floor, so don't fall into to the next apartment below me, right? Same thing in this policy. It has a floor. So that means it's going to keep your money from falling. Okay? So listen, it has an upside potential and it has a floor. Whoa. That's pretty dope. All right? So you mean to tell me my money can grow, but I'm not going to lose it? Yes. Yes, yes. And so a lot of times, a lot of these companies, a lot of times their floor is zero. But there are some who have a floor of 0.5, 0.75, 1%. Okay? So although your money isn't growing, in a great matter, in a great measure, I mean, when the stock market is down, but it's growing. You're not losing money. Everyone else who is actually participating in the market is losing money, but in here, you're not. You're not losing money, and sometimes it's even growing a little bit. Okay, all right. So now this thing sounds too good to be true, right? All right. Now, here's a caveat with most companies. Most companies have what's called a cap or a ceiling. Okay? It means it's not going above this. With most companies, that cap is 12 to 15%. Okay? With most companies, it's 12 to 15%. Okay? And so what does that mean? That means while the market is going up, the money in this account, in this policy, is going up until it hits that ceiling. Okay, so if the market goes to 20, 30%, you don't get that growth, but you get to the 12, 15%. But again, it has that floor. There are some companies that do not have a cap. It's completely uncapped. There are different ways that they go about, make sure that they look out for themselves because they're into making money, but it's not going to keep you from making money, baby. All right? Now, that's great. But you told me that, with this term insurance, now with this permanent insurance with the whole life, with the index universal life, the IUL, it's gonna pay out. We know that. So I'm gonna get that, and I can grow money inside of here. That's pretty dope. But what if before I die, I get diagnosed with a terminal illness or with a chronic illness? Okay, what if they tell me I have less than 12 months to live? I got terminal illness. What if they tell me, what if I get diagnosed, as my father did, what if I get diagnosed with dementia? Or what if I get diagnosed with some type of cerebral palsy or something, where it limits my functioning, okay? What then? Go back to the other bucket. I told you had two buckets. You had to just spend quite a bit of time talking about the cash value bucket. But what about the life insurance bucket, right? Living benefits. So wait a minute. You mean to tell me just like the term life, it had living benefits in its permanent policy, in its IUL? That where my money can grow, but I can't lose it. It also has living benefits, where I can get that coverage for the protection against that threat of terminal illness. I can get protection against that threat of chronic illness, of a long-term care situation. I can get that protection. Sure thing. You can do it. Yes, you can get that protection. All right. So, just to recap real quick, there's two main types of life insurance. There's term, that means it's a term where it's going to end, and there's permanent insurance. Within that permanent insurance, there are two subtypes. There's whole life, and there's IUL. There's others too, but today I'll cover whole life and index universal life. Okay, the whole life is guaranteed to pay out for one, and also has a guarantee to grow at a certain percentage. Okay, that growth tends to be slower than other products, but you can count on it. Are there other ways, other strategies you can use it for? Yes. I'm not talking about that today. Okay, but then there's the IUL. The IUL is tied to an index, so it's mirroring the stock market, but it's not participating in the stock market. So it's going to grow, but when the stock market goes down, you don't lose money. It has a floor that, boom, hits that floor. Stop it. It's not going below that. Here's something I didn't say. Each time the money grows, it gets a new floor. So as the stock market starts growing, it's growing from this point here. Okay? You're not having to play catch up. It's growing from here. New floor. Has the upside potential. It has the floor. It also has, and once again, it's going to pay out one way or another. It's definitely going to pay out. When you die, it's going to pay out for sure. But you can also use it while you're living. That cash value, you can utilize that cash value. It also has living benefits tied to it. Okay? So, I hope this you found this information helpful and useful. Okay? Again, if you find yourself in need of this, you want to talk more about it, you can contact me either by emailing me at laoslegacy22@gmail.com, or you can call me at 330-319-0141. Both the email and my phone number will be in the description. Okay? All right. And remember, everything else, make sure you if I can talk. Take control of your time, your money, and your future. And also, don't forget to like, subscribe, share, comment, and hit that notification bell so you'll be notified when I upload a new video. All right, family. Peace.